We think that this is a major driver of the sanctions resistance of gold, is a major driver of the increased rate of purchases of gold by central banks. I doubt that emerging market central banks would look to increase their holdings to the sort of 30, 40, 50% levels that some of the Western central banks have. But I think we could easily see, on average, up to double digits, maybe 15% as a level that could be conceived and justified. And if that's the case, then we could be seeing gold purchased by central banks for years, maybe even decades to come. You could foresee a situation where a BRICS plus trading currency were to be backed by gold. You'd have to work out where to store that gold, and it wouldn't be London, obviously, for sanctions reasons. But where would you put it that you would trust it's there and that you would trust you'd be able to get your hands on it? And I've given that quite a lot of thought, and there aren't too many alternatives that spring to mind.
Dear viewers, welcome to a new episode of Reinvent Money, where I discuss money, power and geopolitics with only the best global experts. Please don't forget to subscribe to my channel and like this video so it will show more often in YouTube. Today we're going to talk gold. Gold has been on everyone's radar in the past few years due to new record high prices, massive central bank buying due to geopolitical stress. So what is driving central banks, and will they keep on stacking the yellow metal? Today I'm joined by John Reade, who's the market strategist for Europe and Asia at the World Gold Council, the membership organization for the gold industry, and probably one of the best experts in the world. They conduct annual surveys with central banks to understand why they're buying gold. Hi John, thanks for being on the show.
Yeah, thanks very much, Paul. It's a pleasure, and I'm looking forward to this topic a lot.
Yeah, great. So you just published, I think last month, your latest annual survey. In that survey, you're saying that an increasingly complex geopolitical and financial environment is making gold reserves management more relevant than ever. We saw over the past 2 years, in 22 and 23, record amounts being bought. So why have central banks been buying so much over the past few years?
Well, and I think to answer that question in full, you need to look a little longer back. Central banks sold gold, by our estimates, 21 years consecutively in the years leading up to the global financial crisis. That was sales by Western central banks who had a lot of gold in their reserves at the end of the gold standard days back in 1971. And gold made up a very large proportion of their foreign exchange reserves, or their reserves in general. And they were systematically selling it. Come the global financial crisis, that selling stopped. It stopped because the gold price went up. Also, bond yields came down a lot as well. So the alternatives to holding gold became much less attractive. But don't underestimate the political realities as well. A lot of central banks sold a tremendous amount of gold at what turned out to be low prices. I think the Bank of England, which sold 60% of the UK's gold on instruction of the government, got an average price of $275 an ounce.
Yeah, that was called Brown's Bottom, right? Because Gordon Brown instigated that, yeah.
Very much so. So it became extremely unpopular politically to even think about selling gold. And I think that's left the Western central banks effectively stuck with the gold that they hold. So the buying that we've seen since the global financial crisis has almost entirely come from emerging market central banks. And between 2010 and 2021, they bought an average of, I think it's about 475 tons a year. And to put that in context, the size of the gold market is about 5,000 tons. So about 3,600 tons of new mine production, about 1,400 tons of recycled jewelry. So 5,000 tons of total supply. Central banks were buying about 475 tons of it. Fine. So why were emerging market central banks buying gold? Well, they'd amassed trillions of dollars of foreign exchange reserves, principally since about 1990, but had very little gold. So gold's proportion in their FX reserves was tiny. Now, that probably didn't matter in the 1990s when gold was going nowhere and confidence in other currencies and government bonds was high. But the GFC and similar events thereafter have demonstrated to central banks why it makes sense to have some gold. So central banks have been buying good amounts. But the rate of purchases really stepped up in 2022. So we saw a record year for central bank purchases in 2022. 2023 came very close to matching it. It had gone from this average of about 475 tons as high as in excess of 1,000 tons in both of those years. And in the first quarter of 2024, central bank purchases, 290 tons. That was a record for any first quarter in history. So it looks like we're going to see decent levels of central bank purchases again in 2024. So what's changed? Well, I think the diversification into gold from central banks that we've seen since the global financial crisis has continued. That's fine. But the increase in the rate of purchases, I think, is due to a few factors. First of all, the inflation backdrop has clearly changed. In the 10 years that followed the global financial crisis, the challenge that central banks had in the West was to get inflation up to the roughly 2% target that everybody had. I think central banks now realize that the challenge in the next 10 years will be very different. Not to say that we're going to have hyperinflation or anything like that, but it is going to be a struggle to keep inflation down at that 2% level. And you can see that from the amount of time that it's taking for inflation levels to come down. I mean, the second thing is as well, is central banks do take a very long-term view about currencies and currency regimes. They're investing for decades, not for monthly returns or quarterly performance. And therefore, they're thinking, well, the US economy has been the largest in the world. That won't be the case forever. And in fact, by some measures, the Chinese economy is bigger already. So if you look forward a decade or two, then it's very easy to see a situation where central banks have still a lot of dollars, but they have a lot of other currencies too. And the obvious ones that stand out are the Chinese currency and the Indian rupee. But they're not ready yet to invest in those currencies because of capital controls, liquidity, perhaps contract law, etc. So buying gold is a great preparation for actually eventually moving into these emerging market currencies. Because so much of gold demand is driven by growth in emerging markets, particularly China and India. You're effectively getting a hedge for it. The final thing I'd say, and why 2022 in particular is relevant, is as a consequence of the Russian invasion of Ukraine and the sanctioning by the West of the Central Bank of Russia and its reserves. Russia held in excess of, I think it was 23% of its reserves in gold, in physical form, held in Russia, and still has access to that gold and can do what it likes with it. Can't sell it into the West because of sanctions, but it can certainly sell it elsewhere if it needed to. And whereas the currencies, the bonds, the investments that it has in the US, in Europe, etc., it's lost access to those. And that behavior or that event hasn't gone unnoticed amongst other central banks. And we think that this is a major driver of the sanctions resistance of gold, is a major driver of the increased rate of purchases of gold by central banks.
And that's also something you hear then from the participating central banks in your survey, that this was really a trigger for central banks in emerging countries to start buying more gold, or?
It is a factor that comes up in the survey. It is a factor that probably comes up more in conversations directly with central banks. We have a central bank team. We run conferences. We have a lot of one-on-one engagements, and I take part in a lot of those. And it certainly has been a very prominent theme that we've heard in conversations over the last 2 years.
Because I noticed that in your survey, the countries under sanction are not included in the survey. So I assume Russia wasn't surveyed this.
Yeah,
this
we like everybody else are not able to have contact with sanctioned countries. We used to, and in fact, the number of central bank relationships that we have is actually a bit lower now than it was a few years ago because of the imposition of these sanctions. So.
But it would skew the outcome of this survey then, because if you start including sanctioned countries, they for sure are going to say, look, we'd like to diversify away from the dollar for obvious reasons and invest in gold. So in a way...
it understates the importance of this move. I think that's quite right.
Yeah. And so the second quarter, do you already have some visibility on how much was bought by central banks the second quarter of this year?
We've got some visibility. I mean, the way that we estimate central bank movements in gold comes from two ways. One of which is through the disclosures that they make each month to the IMF, where they detail their foreign exchange reserves and the amount of gold that they own. And we have visibility for April and May. We're still concluding, I think, the June numbers, because there's always a bit of a lag in this reporting. But the other component of this is the unreported transactions. So unreported transactions are always present in our central bank estimates. Some central banks don't report their holdings of gold. Some don't report it on time. What we've seen since 2022 is that the unreported component has become a lot more important in our estimates of overall central bank activity. Now, we depend on this data from a consultancy called Metals Focus, who supply all of our supply and demand data. And they have very good contacts with the gold market, speaking to gold traders, shippers. They pay a lot of attention to trade stats, but also what's going on the ground. Similarly, we have decent contacts ourselves in many of these fields. So it does allow us to double check that these estimates are credible. And whilst it's impossible to be precise, we're very certain that the amount of central bank purchases has increased dramatically, and that even though not all of this has been reported to the IMF, that it is taking place. So we'll have to wait really for the release of gold demand trends in about about 3.5 weeks time to get a full handle on the rate of purchases. Perhaps the one thing that was interesting that happened during the quarter, though, was no change or no increase in the holdings of gold by the People's Bank of China for May. So China had been buying gold for 18 months in a row, disclosing those purchases for 18 months in a row. And although the rate of purchases had declined a little bit this year as the prices climbed higher, it did come as a bit of a surprise to us and to the market, I think, when they reported no change in holdings. 18 months of successive purchases by the People's Bank of China. I think the last time they were on a buying program, they bought for 14 or 15 months. So, we weren't too surprised when this happened, because this seems to be the trend in terms of reported increases in holdings by.
But it could be that they decided not to report the purchases like they've done in the past in order to cool down sentiment a bit, so they can buy for cheaper prices again. Like it's in their best interest to buy lower prices and not to report too much, I would say.
Yeah, we don't go into speculation onto individual central banks' unreported activities, but what you've said is certainly possible.
Yeah. And a lot of people say that also applies to Saudi Arabia, for example. They've been buying a lot more than they're admitting. Do you agree with that?
Again, I have no direct evidence of that. One of the things I would say, though, we talk about the central bank net flows in our reporting and our conversations, but it is actually a bit of shorthand. That line should read central banks and sovereign wealth funds and wholly owned government organizations. But it's a bit big to put in the text and certainly on graphs. It is more than possible that we're seeing sovereign wealth fund activity taking place as well. And certainly from my travels to the Middle East and conversations with traders in the region, I would be very unsurprised if we haven't seen big purchases from sovereign wealth funds within that region.
And do you believe the emerging markets, central banks, and some of the other entities that you described are striving to hold sort of the same amount of gold relative to GDP or relative to their total amount of reserves as the Western countries have? Or is that their ambition? Or could you say anything about how much they still need to buy to get there?
It's a tricky one. I mean, when we survey and when we have conversations with central banks, they're often very open about what they've done and why they're doing it. But what they don't do is tell us how much they're going to buy and what the ultimate targets are. So in that respect, they're actually quite smart. I mean, if you remember back, it was the Western central banks, particularly the European central banks, that would tell us exactly how much they were going to sell and when they were going to sell it, which is perhaps
the worst strategy.
It's perhaps why the prices they got were pretty low. God, so look, transparency is not necessarily full transparency is not necessarily healthy for markets. But if I look at the sort of proportions that emerging market central banks have collectively, you're right. They have a lot less gold than developed market central banks. Fine. Would they aim to increase it to those levels? Possibly, but it will take them a very long time. I think as well, if you look at the holdings that developed market central banks have, the portfolio analysis would probably suggest that they've still got a bit too much. I think if you were to start from first principles and say how much gold a central bank should have, I mean, there was the exercise that was done by the ECB when that came into formation, and I think the number came out at 15%, which is why the ECB started when it did, with its reserves at about 15%. So I doubt that emerging market central banks would look to increase their holdings to the sort of 30, 40, 50% levels that some of the Western central banks have. But I think we could easily see, on average, up to double digits, maybe 15% as a level that could be conceived and justified. And if that's the case, then we could be seeing gold purchased by central banks for years, maybe even decades to come.
Yeah, but then do you expect the Q2 to be higher than Q1? This year?
I don't know yet. I mean, the fact that China has stopped reporting increases in its holdings probably suggests. I mean, the risk to me is that it'll be a bit lower. But the other thing about central bank purchases and indeed sales is that they're very lumpy. There's not that many central banks out there that are active in gold, so you could see one buy, one sell, or maybe one stopping buy could have a bigger impact. I'd be more interested in how 2024 as a whole turns out rather than what actually the Q2 numbers look like. Yeah. But I certainly would be looking very at them with a great deal of interest.
It's interesting also to listen to what some of the Western central bankers have to say about gold, especially in Holland. There have been a few interesting facts. For example, this week, a lot of journalists were introduced to take a look at the new vault that we built, and DNB, the Dutch central bank, was very transparent as much as they could in showing where the gold was and answering questions from journalists. They repatriated like 10 years ago a lot of gold. I think a third is now in Holland. I would like to discuss repatriation with you as well. But what do you think, what's the reason for the central bank in Holland to be so transparent about it and also to really emphasize how important gold is? They emphasize that it's an insurance policy. They even put on their website that it could be used to restart the system in case the currency collapses. It's quite interesting to listen to them these days. They're very open about the value of gold, and they're basically the best ambassadors gold companies can have at the moment. What do you think is that?
Well, and certainly I would completely agree with that, Paul. I mean, the central banks, based on the conversations that we had, often own gold for the reasons that the Netherlands Central Bank has disclosed. But what they don't always do is talk about it publicly. And the public disclosure that we've had from the Dutch Central Bank has been extremely useful for us to use when we're having conversations with central banks that are beginning to ask questions about gold, that are beginning to think about it. So I think that they are being honest. I think they're being transparent, which is very helpful to us. It's helpful to the market. I think that transparency is useful to reassure Dutch citizens that the gold is there, explaining why they've brought it back and the reasons for it being there. I mean, it is a trend that we've seen over the last, over the last 15 years, I'd say, post the global financial crisis. And moving gold back to locations, usually in the country that owns it, sometimes in third-party holdings. But generally speaking, there's a recognition, I think, by central banks that if you're going to hold gold, if you're not going to swap it or lease it or do derivative transactions upon it to earn a return, and those interest rates have fallen dramatically compared to where they were pre-GFC, then it makes a lot of sense to actually hold that gold domestically.
Yeah, like they say, not your vault, not your gold, of course, and a classic saying. But yeah, I agree with you. But you also see that in your survey, because I saw in 2019, 28% of gold was stored domestically, and it went up to 41% last year. I can also imagine, for example, I remember Venezuela, that they couldn't get their gold from London. It was confiscated. So the more the West imposes sanctions or confiscates assets, the more they're basically undermining the neutrality and dominance of their own currencies. It doesn't really matter what you think of the war, of the different wars right now in the world. It does lead to an erosion of trust in Western currencies and to a proliferation of alternative assets such as gold. Furthermore, and then those assets also stored domestically. So you expect that to continue the coming years. That more and more countries are going to repatriate their gold from vaults in London or elsewhere to their own countries.
I think I think it's a trend that should continue. I mean, typically when central banks buy gold, most of them, unless they have domestic mine production, but most central banks buy gold in the large London OTC market, taking delivery of that gold physically at a vault in London, maybe the Bank of England, maybe one of the other vaults. And then once they've amassed an amount, they typically ship it back to their own country. And I expect that trend will continue. And it's just as well, to be honest, because central banks have been buying so much gold that eventually it would all stack up in the vaults, particularly in the Bank of England. And, one of the problems with the Bank of England vault is that it's not built on solid rock like, say, the New York Federal Reserve is. London is an estuary, and it's built on mud and silt, and there's actually limits to how much gold you can stack up on the floor there without breaking the floor. So, yeah. So in a way, it's good. It's good for a number of reasons why that gold goes back home. Yeah. The only reason that you really leave gold in a center like London or maybe Paris or potentially Zurich is if you want to actively manage it. And one of the trends that we've seen post-global financial crisis is that central banks are doing much less with their gold in terms of lending it and swapping it. So if you're not going to be active in the market with it, you might as well have it at home. It fulfills a lot of functions at home, not least in which, as you say, security, it's there, but also the public will trust it more if it's there rather than somewhere else. And there's always conspiracy talk about, there's no gold in the Fed, or that the German gold at the Bank of England doesn't exist. I personally believe all these stories are nonsense, but that doesn't stop people talking about them.
Yeah. Now, I think much more relevant is what happened over the past few years in terms of sanctions and confiscation, and that's the true trigger for countries to repatriate.
And for some countries, I'm sure it is, but I very much doubt that Holland or Germany are worried about getting sanctioned by the UK, for example.
No, so why Holland then did repatriate so much gold?
Well, I think
it does. To me, it comes across as a lack of trust in London or New York or.
Well, that could be one reason. It's possible. I think a lot of this comes from domestic political considerations. I remember the debates that were taking place in Germany before the repatriation of much of Germany's gold, when there were regular questions about, is the gold there in New York? I mean, has anybody inspected it, et cetera, et cetera. And one of the easiest ways that you can answer those critics is, okay, fine, bring the gold home, put it in a vault, list a bar list, etc. So it may be distrust. I don't think it's distrust on the basis of the government or the central bank of these European countries, but potentially some elements within the populations.
And the European countries are not buying much gold, but we do see some notable exceptions. We saw Poland, for example, but also interestingly, I noticed, I think it was already last year, that Ireland also bought some gold. And of course, Poland, as its own currency, Ireland is part of the Eurozone. So you think Ireland, they just buy that without discussing with their central bank peers in the Eurozone? Or you think like the Lagarde is also involved in those decisions? Because in a way, it also comes across as a bit of a lack of trust towards the euro if a bank like the Bank of Ireland is purchasing gold.
I mean, look, I'm not going to speak for individual central bank decisions. My understanding of the way that central banks in Europe operate, though, if you're a member of the Eurozone, you've effectively transferred some of your gold holdings to the ECB. So that's often what you see happens when a new country joins the euro area, is that they buy gold, and then that gold gets transferred across to the ECB. As part of its dues to be part of the euro. Now that's not the case in Ireland. Ireland's been a member for a long time. The gold that and indeed the foreign exchange reserves that the individual central banks hold within the euro system, it's up to them what they do with it. And if you think about it as well, I mean, the key word here is foreign exchange reserves. So it's not a vote about the euro, or not an expression of distrust in the euro. It's more saying that they want to have more gold and less of other foreign currencies.
Right,
and other foreign currencies almost certainly being, well, it could be sterling, obviously counts as a foreign currency. And historic ties and links between the two financial systems there could have meant that they sold sterling to buy gold. It could have meant they sold dollars to sell, or Swiss francs, or Japanese yen. I just don't know. I certainly, the one thing I would say is it's actually a neutral decision as regard the confidence in the euro, I would say, because, if you've sold foreign exchange reserves, that by definition would be the euro.
Yeah. And there was a lot of talk about the BRICS possibly adopting a new gold standard, or backing their currencies, or a new basket of currencies, or a new currency completely with gold. What do you make of those rumors, or those, for some people, those dreams?
Well, I mean, the first thing I'd say, and we've seen monetary union in Europe, and taking it that it's worked successfully, and I know that's not necessarily not everybody would agree, but it certainly worked fairly successfully in Europe, in as much as you've got lots of countries using the same currency. Some of the characteristics with them, I mean, first of all, they're very close, both geographically, but also in terms of their economic cycles are very similar. They trade enormously with each other. There's a great deal of movement of goods and services across national borders within the Eurozone. That wouldn't be the case with the BRICS or the BRICS Plus. They're big countries, separated tremendously, trade with each other, sure, but trade with other countries perhaps much more, depending on which ones you're looking at. Their economic cycles are very different. Some are current account deficit countries, some are current account surplus countries. There's a fair amount of bilateral trade with each other. So they're very different. So I don't think anybody seriously is suggesting a Euro-style construct for the BRICS countries. What you could, though, do, I mean, one of the things I always think about when it comes to backing of a currency. What do you back a currency? What's the purpose of backing a currency? Well, you back a currency with something else when you are concerned that people don't trust that currency. And a good example is recently, I think Zimbabwe has adopted a new gold and other stuff backing for its Zimbabwe dollar, which I think is the fifth currency attempt they have had within the last decade because of hyperinflation and economic woes, etc., etc. So having a gold-backed currency, or indeed a US dollar-backed currency, works well when people are uncertain about the merits of owning that local currency, but that they also trust that the backing of that currency is there, and that in extreme cases they would be able to access that backing. If you think about many of the BRICS nations as not particularly trusting each other very much, I mean, I think India and China are still technically at war with each other over border disputes, for example. The currencies that the BRICS nations use are not readily convertible. So if you end up with a load of, $1 billion worth of rupees and you want to change it into something else, that's not an easy process to do. And there has been some talk about local currency trading between BRICS countries not being able to be settled. In other words, I think it was like Russia's got some rupees and they're in India and they can't do anything with them apart from buy goods to export back to Russia. So there is some sense in wanting to perhaps construct a trading currency between the BRICS or the BRICS Plus nations, which means that it can be trusted, settled if necessary, in other words, access the backing of that, and has nothing to do with any of the Western payment systems or indeed currencies. So you could foresee a situation where a BRICS plus trading currency were to be backed by gold. You'd have to work out where to store that gold, and it wouldn't be London, obviously, for sanctions reasons. But where would you put it that you would trust it's there and that you would trust you'd be able to get your hands on it? And I've given that quite a lot of thought, and there aren't too many alternatives that spring to mind. I'm not going to debate my thinking on this, but
I would like to know, because I think maybe Singapore could be an interesting location for that.
Did Singapore follow sanctions against Russia? I don't know. I can't remember.
I am not sure either. But so, what is in your mind then?
And you'll have to do
nice,
something. It would. Let's put it this way: I'm keeping my ears open for any signs of, shall we say, how's the best way? Non-aligned countries that people would trust building more vaulting capability.
A new Switzerland, basically. A new neutral country that people can rely on across the world, and not just.
I don't know. I think Switzerland did follow sanctions against Russia.
Yeah, exactly. So that's why there's also a need for.
So it's an interesting one, isn't it? Well, it's a dilemma. Who would be trusted as independent that you could actually vault? Because in the end, you need to have the gold physically backed, and you're not going to trust that you'll be able to access that gold if it's in India or China or Russia or whatever. You'll want to be able to see that gold reported. So that if you need to take delivery of it, then you have to do so. So yeah, it's interesting.
It's interesting that you think about that, and you're also you actually sound quite convinced that. Did you discuss it also with some of these emerging market participants, central banks? Is this something that's really being discussed? I mean, I've seen many articles, of course, but a lot of it is speculation.
I mean, we've had lots of conversations with, and as nothing we have heard has suggested that there is anything behind these stories. I've been more thinking about, well, how would it work if you decided to do so? Does it make sense? And the answer would be, well, it doesn't make, I would call, economic sense. But then again, there's lots of things that are done that don't make a lot of economic sense. Would it make geopolitical sense? It might. And then practically, how would you go about doing it? And so that's more the thinking I've been doing. In terms of speaking to lots of different central banks, I've got no indications at all that anybody is preparing for this. But then again, that doesn't surprise me either, because in the end, it's not a central bank decision; it's a political decision.
Yeah, but that would mean the introduction of a new gold standard. It would be a new Bretton Woods if that would be successful and popular.
No, I don't think so. I wouldn't describe it as a Bretton Woods. I would describe it as a bunch of countries that don't trust each other and don't trust each other's currencies are looking for tangible backing of a trading vehicle. I wouldn't call that Bretton Woods.
But it would be a new monetary paradigm for sure. I mean, it would also because the dollar would lose relevance, I would say, because if most of these emerging markets and upcoming nations that are going to take over in terms of trade volume the West, they would probably be interested in using this vehicle instead of sanction-prone currencies like the dollar and the euro.
But, I mean, they might use it for trade, but then again, in the end, where does everybody invest their money? They invest their money in U.S. Capital markets.
Yeah. So how long do you think the dollar will remain a dominant reserve currency?
It's not something that's going to happen. I'm 59. It's not something that's going to happen in my working lifetime. I could imagine if I live long enough that I might see a situation where the dollar is one of 2 or 3 or 4 major reserve currencies. But it's a slow shift. I mean, just look at. I was reading some stats at the weekend, so I'm quoting from memory. Equity market capitalization in the world, US is 61%, although its GDP is only 25%. It is overrepresented in terms of its share of financial assets. And if countries reform their economies, open up, get rid of capital controls, form deep liquid markets that people trust in, then we will see a rebalancing over time, I expect, which is more representative of GDP. And the same thing will happen for reserve assets.
Yeah, you see with India, for example, India is opening up more now, so their sovereign bonds are becoming more popular. So some of these countries, they may bitch about the dollar being so dominant, but it's also a matter of them opening up their own markets in order to actually fight dollar dominance, right?
I mean, why haven't we spoken about the euro as being an alternative to the dollar? Because there's no deep, liquid, single capital market of the euro. If the European Union had wanted to take on the dominance of the US dollar, they could have done so. But they haven't taken the decisions, and maybe they don't want to face the consequences of those decisions. Maybe they don't actually want to have a strong euro. Because that's one of the things about it, is the dollar is a strong currency. And one of the reasons it's a strong currency is because it's the reserve currency. Everybody wants to own it. Everybody wants to invest in US dollar assets. If you look at a lot of emerging markets, actually, they actually quite like weak currencies. It fits their economic models. I don't know whether, I mean, people talk about what's that famous expression about the US dollar?
Exorbitant privilege.
Exorbitant privilege. But there's also extraordinary consequences that come from being the dominant reserve currency of the world. And I personally think that the European Union took a look at this and said, okay, do we actually want to do this? Do we want to run big current account deficits so that people can get their hands upon it, the euro in quantity? Do we want to have single capital markets such that we effectively have monetary union? That we have fiscal union as well as monetary union. And I think they looked at those and the Germans said, no, thank you.
Yeah, and also there's just no support for that amongst the peoples, because that would mean a complete integration of all the nation states. And especially now, if you look at the sentiment in Europe and looking at the latest elections, there's just definitely no support for. Final question, because I know we are running out of time, but this year, of course, is also election year in the US. We'll have presidential elections in November, Trump versus Biden. Well, maybe Biden will step out of the race, but what will impact gold more, on the upside or downside, a Biden or a Trump win?
We're about to publish some research on this, which I'm not going to front run. But what I can say, because this is common knowledge, is there tends to be more physical demand, bar and coin demand for gold in America under Democratic presidents than under Republican presidents. Why is that? Well, if you think about the demographic of typical bar and coin buyers of gold in the United States, they tend to be male, older, more likely to vote Republican. So why should they buy gold when their guy is in charge and he's going to make America great again? So on the bar and coin side, I think that's the biggest shift. But bar and coin demand in America, even though it's important, doesn't set the gold price. Far more important is to think about what will happen to the dollar, what will happen to US financial markets under the different presidents. And one of the things that I would suspect is likely is if Trump wins again, he's talking about being more isolationist than he was in his first presidency. And I personally suspect that will mean America will become more of an island in itself. And a lot of the reasons why people will own the US dollar or invest in US assets is because they consider it to be, it's the global reserve currency. And to a certain extent, it looks like the global stock market at the moment. It's where everybody wants to list. All of these things could change under Trump. And if the dollar's weaker, or if US financial markets weaken as a consequence of the actions of Trump, that could be very good for gold.
Yeah, but I would like to introduce another argument. If Biden wins, Trump says he wants to end the war in Ukraine in a day. Biden will continue with supporting Ukraine, which could lead to more escalation and more geopolitical uncertainty, which would be good for gold. So,
I don't know. I think personally, I think if US support is withdrawn from Ukraine, that's a change to the status quo. And I think that in itself would be a big ratcheting up of geopolitical uncertainty if US support ended for Trump. So I think it can play it either way. Yeah. One of the things I would say, though, is I'm not expecting either president to materially reduce the deficit in the States. And that's going to be an issue in the long term.
Yeah.
I'm old enough to remember multiple periods in my financial markets life when people were warning about the size of the stock of debt in the United States or the size of the deficit. but I've never heard so many mainstream economists, sensible economists, apolitical, in other words, not pointing fingers at either the Republicans or the Democrats, but just saying, we've got too much debt, but more importantly, we've got too much deficit, and this needs to come down. And if that doesn't come down, and certainly the published plans of either president suggest that it won't, then I think eventually we will have a problem. We will have a problem in the faith of major reserve currencies, not least of which the US dollar. Because, to be frank, there's other countries around the world that are in a similar situation to the US.
Yeah. Well, let's see. Interesting months ahead in any case. I look forward to your upcoming research, John. It was a pleasure to talk to you. You're very knowledgeable about the market, and it was really nice to be able to pick your brain. So thanks so much. Anything else you'd like to add? Maybe some closing remarks?
No, not really, apart from there's an awful lot of elections this year. It's not just the US one, which is going to be making headlines. We're recording this as the UK goes to the polls. That's almost certainly going to lead to a change in government. And of course, we have the French elections coming up soon as well. I think all of these things are great reasons why investors should think about having an allocation to gold. If you think about the surprising events we've seen over the last 15 years, be it the global financial crisis, COVID pandemic, the Russian invasion of Ukraine, bank failures, gold's really helps your portfolio under all of those circumstances. Investors should look seriously about making an allocation to gold because it helps your portfolio, particularly when bad things happen. Look, the final thing I'd say, Paul, first of all, thank you very much. It's been great talking to you. Second of all of our research and data on the gold market and our comments about gold in the wider financial system is all available on our free website, gold.org. And I'd highly recommend that anybody that's interested in the gold market sign up to our website, and you can pick the sort of research you want to hear. You can also follow us on social media, particularly if you like sarcasm. My Twitter gets a bit crazy at times, but we produce a lot of information. And look, we're a non-for-profit. We're not selling anything. So you can come to us for, I think, a very objective view of gold and its outlook.
Yeah. Well, thanks a lot, John. Take care, and hopefully we can talk again in a year or so.
Fantastic. Thanks, Paul.